What we're going to talk about here today in my slot here is we're going to talk about using options in a credit spread manner for monthly or quarterly income. And I think this is a very important topic because what I found over the years of over my 22-year trading careers thus far is that most traders at home are trying to generate some sort of an income, at least in part. It is one of their goals for making money in the markets. So that this is a very workable and very conservative way of making money in the markets from an income perspective. So if you're looking to generate some sort of a stream of income, then I think this would be your thing to look for. Like when I said, my name is Serge Berger. My background is such that I come essentially from the institutional side, and what that's allowed me to do was work with some of the very best traders and investors in the world and see how they actually make money in the markets. Now, the other thing that it taught me is I was able to work and trade different asset classes. So I've had a feel for multiple different asset classes, which is always interesting, gives you good perspective from a global macro perspective, which I actually think is very important to have in order to make money from the markets over time. And I'm now very fortunate to be able to pass that knowledge on to my direct clients and, of course, the broader audience such as yourself. Now, before we get started here in talking about an option strategy for income, I want to just kind of give you a little bit of big picture thought here because I think it's important to keep things simple. My clients, they know that I'm all about keeping things simple. And I think a lot of people don't do that. And the reason they don't do that is because they look at too many conflicting data points and they eliminate eliminate that noise. So the more straightforward your process is, the easier it is going to be for you to be able to stick with it. The very best professional traders have a very simple, but more importantly, a repeatable process that they can stick with. The other thing I want to quickly mention is that I do think we live in a wonderful time, wonderful era for the individual investor. We have globally dynamic economic forces working together, social forces, and pushing technological forces more and more to better types of software that people can use at home. And I can tell you a lot of the software out there, a lot of the tools available to the private investor are at least as good, if not better, than what some of the stuff is out there available for the institutional investors. Just to give you a bit of an idea. In addition to that, the advent of ETFs and just general improvement in liquidity and a lot of the things and tools that major stocks and ETFs and even futures that people know, the liquidity and transparency has dramatically improved over time. And that I honestly think gives the active investor at home a field advantage. Now, of course, you have to have a strategy that actually works, but that's exactly what we're going to be talking about here over the next, let's say, 50 minutes or so at this point. Now, my first quick question to you is, does your profit and loss curve look something like this? And I would love to see some yeses or nos in here. In other words, you make money, then you give it up again, then you make money again, then you give it up again, and ultimately you kind of trotting sideways. Anyone, by show of hands, anyone can identify with this kind of pattern? And most people actually have this kind of a pattern. Over time, people don't just straight out lose money. A lot of people have sort of a sideways move where they can't really get out of this sort of riskish pattern of making money. So anyone here identify with that? Yeah? Okay, yeah, but there's no shame in that, by the way, right? It's just making money in the markets is not that easy. But the key here is to have an approach that actually works, that you can follow, and that's somewhat conservative. So, or maybe your P&L curve looks something like this, where it's just straight out losing money, where you're losing money, but then you always have these bounces that kind of give you hope, but then you lose money again, and so on and so forth, right? And again, there's really nothing to be ashamed of here with that. It's just the issue is that if that's your P&L curve, the issue not only is a financial problem that you have, it's also ultimately a psychological issue. So I think that's a big point to make as we start off here. Now, I want to cover a really, really important point now that I think is probably one of the most important things we're going to cover in the entire presentation, and that is the need for income at home for traders and investors. I asked you before about who is looking to generate income from the markets, and a whole bunch of hands went up. Monthly income, I think, is monthly or quarterly income for that matter, is very crucial for traders and active investors. And I think over time, I have found by all the research and the data points that we've gathered that not having monthly income is one of the biggest pain points for private investors at home. Now, the question I want to ask yourself is this: how much more calmly would you trade? And I want you to think about this for a minute. How much more calmly would you trade if you knew at the end of the month someone would give you X amount of dollars, right? You would, let's say at the end of the month, someone were to give you 2, 3, 4, 5, 10,000, whatever it is, regardless of how you did in the market, how much more calmly would you trade? I want you to think about that. Would you trade more calmly? Would you be less prone to forced trades? Right? You would. Type a yes into the chat box if you think that if someone were to give you money at the end of the month, regardless of how you did, you would be less nervous about making trades, and you probably would stick to your game plan more, right? That's the big deal here. So what would you give to have some sort of a monthly income from a strategy? And by the way, before we look at the strategy, I'll just quickly say that whether you have a job or you're maybe a part-time job, maybe you're retired or soon to be retired, whatever your situation is, this strategy can work for you very well. You don't have to reinvent your life to be able to do this. So when I used to work at JP Morgan, for example, or any other place for that matter, there was a handsome salary being paid, and part of that, of course, is salary part of that, of course, is talent recruitment. But a big part of that on the part of the bank or the hedge fund, whatever the investment institution is, the reason they pay their traders money on a decent salary on a monthly basis is because they don't want them to take outsized risk. They want them to stick and adhere to their trading rules. Does that make sense, folks? Right? So this is being instituted to professional traders, but the folks at home don't have it because, of course, you're not being employed by a broker technically to trade your money. At least most people aren't. So digging a little bit deeper into this, the importance of monthly and quarterly income. Private investors need that regular stream of income to get into and remain in the right frame of mind. And again, I want you to think about this for a minute. Don't you think that if you had some sort of an income that was given to you at the end of the month, regardless of how you did in your trading, wouldn't you be more prone to be sticking to your rules, right? You wouldn't be forced to constantly feel pressure to make money, or you wouldn't be scared or fearful. It's a whole lot less of the fear and greed factor involved with that. So the trouble is that, like I said before, stagnating or losing accounts lead to loss of confidence in the strategy that you're applying, and ultimately even in yourself. And that we can't have. We can't have your market activities ultimately, obviously, again, losing money is a bad thing itself, but then ultimately even losing to a loss of self-worth, that's not exactly a good thing to happen. That in turn then for most people leads to breaking rules and forcing trades, and before you know it, you are not sticking to any risk management anymore. You're taking on more risk and not adhering to any stops. If you can somehow identify with this pattern, please type in a yes or a yeah or a hell yeah, whatever you want to do. I think this makes a lot of sense to most people out there who have been trading for at least longer than a cup of coffee. How does this sound? So what I'm going to show you today, and by the way, I'll say this, anything I'm about to show you today is 100% true. I'm not lying about anything. I'm not showing you exaggerated results. This is all 100% true. I have way too much reputation risk out there to show you something that doesn't work. This is 100% true, and it definitely works using it the way that I do. So the strategy I'm showing you here right now is a low stress, high probability, and highly repeatable strategy. That word repeatable is so important. If you have a strategy that only gives you a trade once a year, that's a little difficult in order if you want to be in charge of your own money. So the trades that I'm going to show you are 80 to 90% profitable. So out of 10 trades, between 8 and 9 on average, should be profitable. And the time requirement is about 1 hour per week. This is no hectic trading strategy. This is a strategy to generate income on a quarterly, monthly kind of basis, which is, I think, like I just said over the past few slides, one of the most important aspects for traders at home to have is that sort of steady income stream. Really, really important. Now, the greatest thing about this strategy, besides the fact that it's not something that you have to reinvent your life with or be very, very hectic about things, is that the market can go in the desired direction that you're making a bet in. So let's say you are getting a bullish signal, right? The stock can go up, or with the ETF or whatever it is you're looking at, of course, right? And you make money. But it can also go sideways, and it can even go in the opposite direction to a good degree, and you can still actually make money. At the very core of this strategy lies the concept of steep slopes that go vertical. What happens when a steep slope goes vertical, we'll cover in just a couple of slides, but I want you to just look at this chart here for a minute and look at this. This happened to be Amazon.com, and you can see the stock had a very steep incline, and ultimately it went vertical. Well, at some point, when that happens, the stock gets exhausted. Of course, the question you're probably asking yourself is, well, that's nice to know, Serge, but I need to know, when does that actually happen? When does the stock stop going higher? Well, we're going to cover that in just a few slides. And the same concept applies on the downside here. You can see, look at this, for example, Walmart. You can see the stock in this example had a steep decline, and then it basically went vertical to the downside. And at some point after that vertical drop, it started to get exhausted on the downside. So what happens? When steep slopes go vertical, again, this could be a vertical move to the upside or a cataclysmic decline to the downside, a couple of things are going to happen. At some point, implied volatility will increase or become elevated, regardless whether that moves to the upside or to the downside. Second, investor fear or greed reaches extremes, and that's exactly what we want to get to. So if you get to a point where investors get extremely greedy, you want to be taking the opposite of that, and same thing on the fear side. And ultimately, all this boils down to this: reward to risk for a counter trend trade become absolutely amazing. And we'll look at this here in just a couple minutes. Now, who in here, by show of hands, has ever traded an option? Please type a yes into the chat box if you've traded an option before. That would be good to know, just so I have a rough idea of what people's experience level are with options. Who in here has traded an option before? Yeah, okay, I'm getting a whole bunch of yeses. Has anyone in here ever done something called weekly options? And just so you know, this is not weekly options. This is not about weekly options, not at all. But I'm just curious if anyone's ever done that. Has anyone ever sold weekly options? Okay, I'm getting a whole bunch of yeses. Okay, this is not about weekly options. Why? Because it doesn't work. Okay, so I just want to, just for those of you guys that are familiar with option selling, and maybe you've heard about selling weekly options, how many of you doing weekly options are making money with it? Probably very few of you. Probably, I'm not. If someone is, that's great, but probably very, very few, right? Okay, so let's have a look at this. What we're going to be looking at here is, I'm going to show you the statistics of option selling, and people who talk about option selling strategies will give you these statistics. The trouble is that unless you do this correctly, these option statistics are not correct. Okay, I'm going to repeat this. Unless you use an option selling strategy correctly, and for the most part, for me, that means no weekly options, these statistics are generally not true. Okay, so far, I'm going to show you this right now. Now, the odds are strongly in favor of option sellers. What they will tell you, and again, these statistics are true, but they're only true if this is done correctly, more than 75% of options expire worthless. What does that mean? On average, it means that if you hold an option, if you buy, let's say, a call, you only have about a 25% chance of making money if you hold that option until expiration. Right? If you're looking to buy an option, you hold it to expiration, you only have about a 25% chance of making money. Conversely, if you were to be a seller of options, right, you by process of elimination would thus have a 75% chance of making money if you held it to expiration. Now, this is where it gets really tricky, because this is where a lot of people will tell you these statistics, but then they'll try to tell you about some aggressive weekly option trading strategy, which, in my opinion and in my 20 years of experience, just simply doesn't work over time. So what they'll also tell you is that the longer you hold your short options, the better your odds of success, right? Options are a wasting asset. Time is on the option seller side. It's called theta. Anyone in here ever been told to play the time decay game by show of hands? Anyone here ever been told to play the time decay, the theta game, time decay? Yeah. Okay. I'm going to tell you right now, and this is going to cause some controversy. I'm going to tell you that's a low probability way of making money, and let's show you exactly why and how that's true, because that's how the smart money trades, is by not doing this game. Now, option sellers on average win even if the market is going against them. That's the great thing about it. But again, you have to be an option seller using a strategy that actually works. And this, I promise you, this absolutely works if you do it the way that I do it. So I want you to write down these 4 steps. Very, very important. You can take a picture with your iPhone or with your whatever smartphone, smart tablet, whatever you got, or write it down by hand on a notepad like we used to do, not that long ago. So these are 4 simple steps that we're going to follow right now, and I'm going to show you guys how this trade works step by step over the remaining time that we have. Number 1, I want you to look for steep slopes that have gone vertical, and they're giving us signs of exhaustion, right? That's a really, really important first step that we need to do. Number 2, we're going to ensure implied volatility. We're going to ensure implied volatility is at least somewhat elevated. Okay, at least somewhat elevated. Number 3, we're going to check for liquidity. We're going to check for liquidity to make sure the options have enough liquidity, which in my opinion is very, very important. You don't want to trade options or even stocks for that matter that don't have good liquidity. I think that over time is not a good thing to do. And then thirdly, or the fourth point here, my counting is off early this year. What we're going to do is we're going to be selling far out of the money call or put spreads. Okay, this is the key. We're going to be selling far out of the money call or put spreads using options expiring 2 or more months out in the future. Okay, and I want you to really pay attention now, please. If you've stepped away from the computer, or if you're clicking around on a different screen, or if you're texting or Facebooking, whatever you're doing, please pay attention now. This is the key. And I can promise you, there's almost 100% chance that for most of you, you've never seen this before. Because I don't think people do this. In fact, I know people don't do this. Otherwise, a lot more people will be making money as an option sellers. And then what we're going to do, we're going to be rinsing and repeating this on a monthly basis. So we're going to be really, literally creating this monthly income stream, this like income machine. This is what we're going to do. So let's talk about this a little bit more and look at the examples. Remember, this is all about having steep slopes go vertical. So what you can see here is, in this case, shares of Alcoa. They had a very steep rise, and then they went vertical. And what happened after that vertical move? At some point, it got exhausted, and it stopped going higher. You can see that, right? It stopped going higher. Just like here, Netflix, for example, as well, you can see at some point that stock, after the steep rally went vertical, at some point it got exhausted, and it no longer went higher. So let's look at a first example. And we're going to skip this slide here in the interest of time, and we're going to look at Facebook. And what you can see here is that Facebook at this point in time had a very steady incline. And every time it went vertical to the upside, every time that steep move went upside to the vertical, what happened? Repeat after me. It stopped going higher. In fact, a lot of the time it actually mean reverted back, right? But that's not really that doesn't have to happen. That's the great thing about this strategy. You don't need big outsized moves to make money in this strategy. You just need the stock not to literally 100% go against you immediately. That's the only thing. That's and even that, and I'll show you in a minute. That is a great way of risk managing that as well. So every single time in this example, the stock went vertical after the orderly move to the upside, it stopped going higher, and it, again, in this case, actually mean reverted back. So let me show you an example of what I did in this situation. So I'm going to take down a real-time chart here in Facebook, and I'm going to show you what this looks like. This is an actual chart of Facebook on the platform here. And so you can see the stock moving higher, and then ultimately it ended up going vertical. This is just one of those things that I showed you, one of those moves that I just showed you up there before. So it went vertical, and it actually marginally breached the upper end of its trading channel, and so on and so forth. You can see that. Now, up here, there's a couple things you can do. You could short the stock. You could sell the stock if you long it, right? Just so you're out of the position. You could buy a put. You could buy a put spread. There's a whole bunch of things you can do, right? Now, let me ask you one question. If I short the stock here, up here, after the stock in the orderly move went vertical, if I short the stock or if I buy a put, what has to happen in order for me to make money? Can anyone tell me what has to happen in order for me to make money at this point if I'm buying the put or I short the stock? What has to happen? What has to happen to the stock? Right, the stock must go lower, right? Otherwise, you can't make money. Unless, in this scenario, if you shorted the stock or you bought a put, unless their stock went lower, you can't make money. It's impossible. It must go lower, right? And just so you guys know, I'm going to show you guys some historical examples right now, just so you guys can understand the concept. I want you to understand the concept first, and then we're going to go into real-time examples, okay? Now, instead of doing this, I made the following bet. And again, this is really, really important. Please, please, please pay attention. I simply said that I don't think after the stock has already gone vertical, I don't think the stock at this point is going to rally about another 8 or 9% against me. Okay? Instead of saying the stock must drop, which is the bet you're making if you're shorting the stock or you're buying a put, right? I simply said it's not going to rally another 8 or 9% or so against me. Okay? Does that make sense? So what I did is the following. I did a so-called bear call spread. And if you're new to options, this may be a terminology you've never heard of, but it's very, very simple. I simply sold a 125 call and I bought against it a 130 call as a spread, and I received for that $1, or in options terminology, $100 credited into my account per one time I'm doing. So if you did it 10 times, then you credited $1,000 and so on and so forth. Now, here's the key to this. The stock does not have to go down for me to make money. So what happened in this case, though, the stock did go lower. Okay, again, this is just an example for right now, and I'm going to show you real-time examples in just a minute. Okay, by February 8th, just a few days later, the stock went lower, and the spread was reduced to $24 or 24 cents in options terminology, meaning I got to keep the difference. I got to keep the difference, which means I got to keep $76 of that maximum $100. Okay. And I was out of the trade. All right. So again, before we go to the next example, let me just make sure you understand this. The big difference between what the bets that I make in the market and what a lot of other people make is that in this case, when the stock got overbought, I didn't short the stock. I simply said it's rallied so strongly. Yes, it can still go higher, but I don't think it's going to go higher another 8, 9% over the next, let's say, 1 or 2 weeks or so. That's the only bet I'm making. And if I make that bet, I can make money. Whereas if I would have shorted the stock or bought a put, let's say, just to make it simple, the stock would have had to drop. Now, in this case, it did drop, as you can see, but it didn't have to drop. And this will become more clear with the next couple of examples. How about here in shares of Tesla? Let's just go straight to the chart. The stock had a very steep decline, and then it dropped vertically. Well, at that point, what I did is I sold, again, and in this case, actually I made a bullish bet. I simply said, I don't think, now that the stock has gone vertical, I don't think it's going to drop. In this case, I think it was another 20% against me. So I sold a June 120 put, and I bought against it a 110 put. And I pocketed the difference, which means my account got credited $2.25 or $225 per one time I'm doing this, right? So if I do this 10 times, it would be $2,025 and so on and so forth. Now, again, understand the difference. If I would have bought the call or if I would have bought the stock would have had to rally for me to make money, right? Now, in my case, I simply said this stock is not going to drop another 20%. Do you think if you made those kind of bets, by show of hands, do you think if you made those kind of bets and simply changed the way you're structuring your trades, you could make money? Yes or no? You have a dramatically higher probability of making money if you simply make a bet of where you think the stock is most likely not going to go, as opposed to making a bet of where the stock has to go. It's a completely different way of thinking. It's what the smart money does, and what happens by doing this, you become the casino. You're no longer the gambler that walks into those casinos. You are the casino, okay? And that is the hugely, hugely important thing here. Now, let me show you another huge thing here, and we'll talk about it in 1 second, but let me finish the trade here. So by March 16th, about a month later, as you can see, the stock ended up rallying this example, right? And there's the spread reduced but to 43 cents. I got to keep the difference, which is $182 per one time doing this. If they would have done this in 10 contracts, let's say you would have made $820 and so on and so forth, right? Now, I want you to notice a couple things here. Remember before I said that playing the time decay game is very dangerous? Notice something here. You guys can see I put this trade on in February, right? In the month of February, right? I did not sell February options. I didn't sell February weekly options. I did not sell March options. I did not sell April options. I did not sell May options. What month options did I sell, guys? What month? I sold June. June expiration. I can tell you by fact that almost no one on the retail side does this. But here's the key. Notice how long I kept the trade. I only kept it a few weeks at most. Usually on average, you keep these trades a few days to a few weeks. This is game changing if you understand this. Most people are unwilling to learn this or understand it because they think they have to do a quick money trade by using an option that expires next week or next month. And then they have to flip it. I'm telling you that's very dangerous. Okay, if you want to trade income from the market, and I'm talking about income, that's the big thing here. You need to have a strategy that you don't get killed on when a trade goes against you. If this trade goes against you, you're going to lose very little money compared to if you use an option that expires, let's say next week or next month. Okay, that's a hugely. Give me a hell yeah if that makes sense so far, folks, or just a yes. I don't want to curse here. Give me a yes if this makes sense so far. If you could see that by using this, you could make money. Right? It's a complete game changer for you for most people if you haven't looked at the market this way. Let me give you another historical example so you can understand the concept a little bit more before we look at some live charts. Okay. In this case, we're looking at another stock, and you can see the stock had dropped very sharply, and then it went into vertical drop mode here, right? So at some point, though, the stock got very oversold, and I simply made another one of those bets. And I sold an out of the money, what's called a put spread, about 15% below the market or so. And so I simply said that, you know what, I don't think this stock is going to drop another 15% against me after it had already had a steep decline and then vertical. And by doing that, I just dramatically increased the chances of making money, right? Now, again, in this case, actually, I kept, as you'll see in a minute, I kept this until expiration. This is for illustration purpose. I just want you to see this, right? Although we only hold these trades for the most part for a few days to 1 or 2 weeks, I think the average is about 14 days or so. It's the average duration of these trades. So by March 16th, that spread was reduced to 43 cents. So about 1 month later or so, a little bit more, the spread was reduced to 43, meaning we ultimately got to keep a lot of this, in fact, all the profits. But notice what happened. The stock did not go higher. It didn't go lower. It just went sideways, and I still made money. Let me ask you this question one more time. If I would have bought the stock here, what would have had to happen for me to make money? Higher, yes, the stock would have had to go up. It didn't go up, right? So if you would have bought the stock or bought a call or a call spread, you would have not made money. With this, we made money. In fact, we ended up, in this case, actually holding this, and again, this is for illustration purposes. I mean, this was an actual trade, but I usually don't hold it to expiration. In fact, not even close. We got to keep the entire 95 cents or the entire $95, or if you did it 10 times, let's say you would have made almost $1,000 on this little trade, just by the stock going sideways, right? And by the way, we took in huge premium because the implied volatility was very high. All right, now let's continue with this and just kind of go through a couple of concept things, and then we're going to go into the live market, and we're going to look at some stocks. I'm going to ask you guys to put in tickers so you can see how the concept works. Now, the objective with all of this is not to pick winners, but rather it is to stay out of losers. All right, a lot of people who apply an option selling strategy end up having, let's say, 5 winners, but then they have 1 loser that basically wipes out most of those winners. Who in here can identify with that? Who in here has ever has a pattern of making money for, say, a whole bunch of trades, but then you have 1 or 2 losers that wipes out most of those gains? Give me a yes if that's you. Most people are that, by the way, so don't feel bad if that's you. Most people do that. So let's continue here. Doing this, focusing on not having too many losers, is going to basically make the profits take care of themselves. Now, again, like I said before, I'm going to quickly repeat this. The big difference between this and by doing directional trades, and by directional I mean you buy a call, you buy a stock, and so on and so forth. The big difference here is that you are making a bet on where the market is most likely not going to be at a certain time in the future. Conversely, option buyers and stock traders make a bet on where the stock where the stock has to go in order for them to make money, right? So this is a dramatic change in a shift in attitude, and all it does, if you do it right, and by all I mean this is the most important, it basically takes you chances up to over 2/3 making money. If you buy a stock, guys, you have 1/3 chance of making money, correct? The stock can go either up, it can go sideways, or it can go lower. So you have a 1/3 chance of making money. With this, you have at least a 75. The way I do it, you have an 80 to 90% chance of making money. Okay, and that's the huge difference here. Now you got to give yourself time. The great thing about this strategy, the perfect timing is not necessary. I am totally against sitting in front of the market all day long and looking at the flickering ticks. It's not my thing, I should say. I'm not saying that's not for anyone. It certainly there are people who like to do that. It's not my thing because, well, it's not my personality, and I would rather do other stuff like doing research and doing macro research and all the kind of stuff. So many traders fail because they don't give their ideas adequate time to work out. And if you plan your income stream months ahead with this strategy, all those problems are essentially solved. I want you to think of the credit spread as your regular income type of trade, and treat anything else that we do, whether it's a swing trade or even a day trade, as kind of like a bonus. Because like I said at the beginning of the presentation, the most important thing here is that you generate some sort of an income stream. What most traders and investors need, just like most employees, need some sort of a salary. They need income, whether that's on a monthly basis, on a quarterly basis, that kind of thing. Okay, now let's start going to some live examples, and I'm going to ask you guys in just a minute to give me some ticker symbols. But before we do that, let me just show you a couple of things here. You guys see those blue arrows on the chart, right? Blue arrows here? Right. What happens after there's no more blue arrow on the right-hand side? The stock stops going higher, correct? Repeat after me. After the blue arrow stops, the stock stopped going higher, correct? Yes, it went lower. Indeed, it went lower. But more importantly, the stock stopped going higher. How about here in Google, in shares of Alphabet? What happened after the stock stopped going higher? After there's no more blue arrows. What happened? The stock stopped going higher, correct? How about here in an ETF? This is the consumer discretionary ETF. This was just a while ago. I don't know, I can't remember when this was, not that long ago. What happened after the blue arrow stopped? The stock, or in this case the ETF, it stopped going higher, correct? All right, let me take a sip of water. What this is a beautiful opportunity to sell option spreads, just like the way I showed you for the past 35 minutes, for income. Okay, what this does, these blue arrows will tell us when a stock is either dramatically overbought or dramatically oversold, right? When there's no more blue arrow, after the last of the blue arrow prints, what happens? The stock stops going higher, right? Exactly. So it's a beautiful opportunity to make a bet that the stock's going to stop going higher, right? And you generate beautiful income by selling these. In this case, you're selling a call spread, just like you would be doing the inverse if you had a stock that is oversold. Okay. Now, what this is the TST Vertical X Pro indicator, and what it does, it finds these dramatically overbought and oversold stocks and ETFs with the click of a button. These are high probability option credit spread setups that you get from this indicator. I'm gonna go to the live market with you guys and ask you guys to give me some tickers in just a second. Now, what the indicator also does is it just finds the highest probability for option credit spreads, period. That's really what it does. And it forces you to develop a watch list. It keeps you from buying and selling at the exact worst spots. These are all side benefits, right? It also forces you to be patient, calm, and collect. But most importantly, what it does, it gives you these super high probability trading opportunities for options income. I'm going to show you guys how this works in a second. So actually, let's just go through some live charts. So if you guys want to give me some ticker symbols, some people have typed in. Okay, so let's look at, for example, Square. Okay, so the last time I type in square, here's square. So the last time the square had this up arrow, this arrow was here. Can you guys see that? What happened after there's no more blue arrow? The stock stopped going higher, correct? Stock stopped going higher. Exactly. Okay. Other ticker symbols. Let's see. What do you guys want to look at? Oracle. Sure. Christopher wants to look at Oracle. Oracle. Let me get it in here. This is Oracle here. Okay. I'm just taking your charts. That's all I'm doing. I'm just taking the examples you're asking me to do. Oracle. What happens after? Let me just zoom in closer. What happens after the blue arrow stops? The stock stops going higher, right? How about here? The stock stops going higher. Beautiful opportunities to sell these call spreads for income. All right, let's see some more names. How about something on the bullish side? Let me see. Nvidia, sure. Let's have a look at Nvidia. Here's Nvidia. This just recently. Oops. Ooh, that's a big chart. Oopsie. Here, let me look at Nvidia. Oops. Let me go in here. Okay. This is the last time we got an oversold signal in Nvidia. What happened? Repeat after me. What happened after there was no more, in this case, no more orange arrow? The stock stopped going lower, at least for a few days to 1 or 2 weeks. That's our time period. Am I correct? Right? You can see after there's no more blue arrow down here, the stock stopped going lower for at least a few days to 1 or 2 weeks, right? That's our time period, correct? Beautiful, amazing opportunity to sell these out of the money put spreads. Am I correct? You would have made money just by the stock going sideways. The stock didn't have to go higher, even though it did, right? Okay, let's look at more examples. How about, let me see. Sure, let's look at Lockheed Martin. Yeah, let me give you Lockheed Martin. Let me find it here. This is, I just want to put in names that you guys know that you guys are asking. Here's Lockheed Martin. This is just a few days ago, actually. This is the most recent signal in Lockheed Martin, just a few days. Okay, I'm not making this up, guys. These are the ticker symbols you guys are giving me, and these are the errors that I'm not drawing these in just in case you're wondering. Okay, just some people doubt these things. Repeat it after me. What happened after there's no more orange arrow? The stock stops going lower, correct? You would have already made money in this, and it's, by the way, at this point you're probably getting out of the trade already because you've already made about 50% of the credit you received, which is our target. Okay. Continuing. How about, sure, Caterpillar is always a good example. Yep, that's from Michelle. Caterpillar. Here, this is the last time Caterpillar gave us a signal. Repeat after me. What happened after the orange arrow stopped printing? The stock stopped going lower. Do you think you could make money if you had a way to make a bet in the market that it would not require a stock to go higher if you made a bullish bet? In fact, that it could go sideways, or it could even go against you to at least a few percent, and you could still make money. It's a complete game changer, right? Give me a yes if that makes sense to you folks. All right, more ticker symbols. Type in some more ticker symbols, folks. So I just showed you, we just looked at Caterpillar, we looked at Lockheed Martin, we looked at Nvidia. How about Starbucks? Sure, Starbucks is a name that everyone knows. Absolutely. This is from Killaby. Starbucks. All right, here's Starbucks, and this was a bearish setup. This is the most recent time we got a signal on Starbucks. What happened after there's no more blue arrow? What happened to the right of these blue arrows? As soon as the blue arrow stopped printing, what happened? What happened? Repeat after me. The stock stopped going higher. Am I correct? Right. This is an opportunity to sell what's called a bear call spread. That's where we make a bet that the stock will simply not go much higher from where it is right now. That's a high probability strategy. Perfect. All right. Okay, so we looked at Starbucks, we looked at Nvidia, looked at all those names. How about I just want to make sure their names everyone knows. How about sure, EL, is that Estee Lauder? Craig? Okay, yeah. Estee Lauder here. This is the last time. This is the last time when Estee Lauder gave us a sign. What happened after there's no more orange arrow? Repeat after me. The stock stopped going lower. Beautiful opportunity to sell out of the money put spreads. to generate income. The stock goes a little sideways, maybe even goes a little bit against you, or it goes higher. In a matter of usually about 1 to 2 weeks is our average, you make money. Okay, this is a completely different way of thinking about the market. You're not making a bet on where the stock is going. Intel, sure, let's have a look at Intel. This is from Thomas Atkin, right? Here's Intel. This is the last time Intel gave us a signal. Okay, what happened after there's no more blue arrows? Repeat after me, Thomas. The stock stopped going higher. Correct? A beautiful opportunity to sell out of the money call spread. Does anyone want to know how I developed this indicator, by the way? If you guys care, I'm happy to tell you about the story how I developed it. I developed it actually while at JP Morgan. Okay, I'll tell you a story. So when I was working at JP Morgan, one of my managing directors told me he wanted me to figure out a way what determines overbought and oversold in certain credit default swaps. If you don't know what credit default swap is, don't worry about it. And I then, years later, just before I started my own company, I looked at this and I started also looking at it, making and tweaking it and making it better for stock. So ultimately, this was actually developed at JP Morgan. Okay, this is not their property, by the way. This is my own property, but just so you know, this was, and we used it there for ideas. So just so you know, that's what happened. Okay, so it's not something that I'm just kind of randomly making up here. This is institutionally tested. Oh, sure. Let's have a look at GBT. This is Bitcoin, right, Stephen? Sure. Okay. By the way, I mean, I'm not a Bitcoin trader, but just so you know, here, this is Bitcoin. Okay. These are the last 2 times. What happened after? This is a Bitcoin tracker, right? What happens here after the last blue arrow? Stock stops going higher. You have to wait until there's no more blue arrow. That's the way we use it, right? And also here, what happens here? This is the most recent. By the way, this indicator literally top ticked the high, more or less just about the exact high in Bitcoin. What happened here on December 18th, 2017? The indicator told us that Bitcoin's overbought. Okay, would have been a crazy good idea. And you could, and by the way, you can use it for trading stocks as well. But I like to use it for credit spreads because that's the thing I do, because it's such a higher probability way of making money. Honeywell, sure, HON here. This is for Claris, right? Honeywell, this is for you. When the blue arrow stopped printing, what happened? The stock stopped going higher up for at least a few days to 1 or 2 weeks. Yes, you put on these credit spreads, boom, you got a moneymaker. So how does it work? And we can look at some more examples if you guys want in just a few minutes. But I want to, because people are asking how does it work and where does it work and all that kind of stuff. So the way it works is that you can install this either on your trading platform, and I'll show you which ones it works, or you can use it on our own platform, which is called the market Rover. So we'll talk about this here in just a minute. But basically, all you do is you install it on your platform, and then you essentially get 2 scans. You get overbought and oversold scans, right? And then all I do every morning is I come in and I get the overbought and I get the oversold. And so, for example, right now I'll look at, say, something like this PKE, right? So I'm literally just coming up this. I don't know if this stock has enough liquidity, and I have no idea. It's on the radar, right? So then you have to make sure it has enough liquidity and so on and so forth. And you can see the last time it gave us overbought signals here, and what happened after that? The stock stopped going higher. Correct? That's all it is. You just look for these opportunities, right? These are opportunities that are setting up now, right? They're not yet qualified. Like, for example, these errors are still printing. You have to wait until you have a day without an error, right? And I'll show you guys in a minute how you can learn more about that. But this is, for example, a trade that's just in the process of setting up. That's why it's on the watch list, right? So these are the overbought ones. And then this one here, there's actually none that are dramatically oversold right now for this, so we can ignore that for now. But that's all you do. Every morning you come in, you look for the overboughts and the oversolds, and you see if they qualified. Done, right? So that's as simple as that is. Now let me go through and show you a little bit on how all of this is being put together. You can make it work intraday as well. The scanner focuses on the daily scans, but it works intraday. It really does. I'm not a day trader, so I don't use it for intraday. I'm a credit spread trader, so we use it for generating income, right? But it works intraday. It really does, right? This is Thomas and other people were asking that. So how does it all work? What you can do today is you can get the course, the Options Income Secrets course, which includes the indicator and includes everything you need to make money with this strategy. So if you want to generate income, whether it's a monthly or quarterly basis from options, a very conservative option selling strategy that actually truly works, just so you guys know, we made 70% last year with this strategy, 70%. Okay, and I'm happy to share that track record if you email us. Low stress, high probability cash flow strategy, and we're using the options the way the pros do. 89% winning trades. In other words, out of 10 trades, about 8 or 9 should be profitable if you do it the way we do. You get with the course, this is a video course, you get to watch it over and over and over again. It never goes away. And you are going to get with it a bonus ebook. And all of this, including the indicator and scanner, and actually a whole bunch more stuff I'll tell you in a minute, is just $197. It's thesteadytrade.com/income. This is a one-time fee. This is not a recurring fee. It's not a subscription. It's just a one-time thing. And so it's $197. You go to thesteadytrader.com/income. Now it's an online course, and you get with it indicator scan. I'll talk about that, the indicator scanning more in just a second. Also, by the way, we just added a new module. It's called Module 6. And it includes what I call the pro strategy, which is the iron condor. We'll teach you how to do this strategy to literally double your option selling returns. But if anyone's ever done an iron condor, this is actually the way the pros use it, which is very different from the way that most people do it at home, because I see what's being taught out there. So this is actually, that's a really good chance of making money, versus a normal iron condor is not that good. But this is awesome. With it, like I said, you get the TST vertical export indicator and scanner, right? Again, what it finds is these dramatically overbought and oversold conditions in stocks, ETFs, and in whatever you make it scan, and you are get with it the scanner that runs it, and so you get these opportunities. What does it work with? Just so you guys know, it works for Thinkorswim, it works for TradeStation, NinjaTrader, TradingView.com, and our own market Rover, which I'll talk more about that in just a minute. Also, we do live bonus sessions. I'm a big believer in continuing education. So when you get this for a one-time payment of $197 today, you also get with it live bonus sessions. So what we do is about once a month or so, maybe every other month, it kind of depends on how we flow, we do a bonus session. The next one is on January 17th at 11 Eastern. That's 11 a.m. New York time for those of you guys that are maybe in Europe or Asia. And it's always going to be recorded, so don't worry about it. We do this on an ongoing basis. You get to do these, join these for as long as we do, which is, as far as I'm concerned, a long time, years and years and years and years. So, because I want you guys to learn to also be plugged in and hear from us in real time, so you can ask questions, and so you can be plugged in how to do the strategy and ask all the details. So the next one is January 17th. I don't think this strategy, or this is for people who like to swing for the fences. If you're a gambler and if you just want to kind of, punt around the market, this is probably not your thing. But if you truly want to generate income in the markets, if you're serious about making money in the market, if you're looking to dramatically reduce your stress, to have a process, to actually have a way that works making money in the markets, I would highly suggest this is something for you. You're going to learn in the course a whole lot of stuff, including how to use implied volatility, how to use charts with this, how to use it and turn this into a monthly or quarterly income trading machine, how to diversify this among different sectors and groups and even different asset classes if you want to. It's all in there. And again, we do the live bonus session as well. Now, you can make this scan for futures and currencies as well if you want to. Yeah, it'll work for everything. That's not the issue. Now, we're also going to give you another couple of supercharged trading tools, just so you guys know. We're also going to give you access to the Market Rover Lite. What is the Market Rover Lite? The Market Rover Lite is an online. It's based on our. It resides on our website. It also works on your smartphones and also works on your tablets and all that stuff. It's very mobile. It gives you dramatically overbought and oversold. It gives you buy and sell signals. This is a second indicator. It gives you buy and sell points and signals on stocks in the S&P 100. Okay, it's web-based, it's accessible on any device. You don't need to install this anywhere. It gives you these high probability bullish and bearish reversals in the S&P 100 stocks using what's called the B2 reversal indicator, which is one of my proprietary indicators. So essentially, with this, you get another indicator for free using the S&P 100 on our market overlights. Also, we're going to give you, if you sign up today, we're going to give you 30 days access to the entire Market Rover Pro. The Market Rover Pro is an entire process of finding and managing your money using giving you all the indicators that we have, gives you the entire process, trade alerts, the whole thing, so you get 30 days access to that as well. So you guys know, if you don't have one of the platforms that we just talked about, if you don't have, let me go back to this for the indicator, okay? If you don't have Thinkorswim, if you don't have TradeStation, NinjaTrader, or TradingView.com, the Market Rover on our platform actually has the TST Vertical X Pro indicator built in. So I'll give you a quick sense of what this looks like. So this is what the Market Rover looks like. I actually update things in here every single day, giving commentary, and you get buy and sell signals. The TST Vertical X Pro indicator is here. Okay, it's in this column, so you don't have to install it anywhere if you don't have those platforms. We're going to give you 30 days free to that as well. Okay, so there's a lot of stuff included here, and everything you need to make money with credit spreads to actually have a much less stressful way of making money in the markets. Okay, so let me recap. What this includes is a course. That's the online-based course. You can watch it as many times as you want. It includes a bonus ebook. It includes the bonus module that we just talked about for the Iron Condor. It includes the TST Vertical X Pro indicator. Like I said, it works for Thinkorswim, TradeStation, NinjaTrader, TradingView.com, and the Market Rover. Also, you get the live bonus sessions. The next one is on January 17th. So what I would encourage you to do, if you get this now, if you choose to get it today before the price goes up, get this today, watch the videos, and don't worry too much about the indicator just yet. Just give yourself a little bit of time. Come back January 17th. That's not that far away, and we'll teach you all the details of how to use the indicator. I showed you today a lot how to use the indicator. I'm going to give you the rest of everything you need to know about that on that bonus session as well. And again, we do these on a recurring basis, and it's recorded. We do these bonus sessions about once every other month or so, roughly thereabouts. Okay. So that's what that is. Also, like I said, what you get with this is the access to the Market Rover Lite. Let me go through this here. The Market Rover Lite, which is our online-based platform with another indicator, that's the B2 reversal indicator, and you get 30 days access to the Market Rover Pro. And we're going to give you a special offer to the Market Rover Pro if you choose to continue after that. Okay, but at least you have access to it now, so it's a fair deal. Okay. Let's see here. So yeah, so like I said, the Vertical X Pro indicator and a ton of other stuff, the whole process included in the Market Rover Pro. And you'll hear about this. You'll get access to webinars that we do for the Market Rover Pro and all that kind of stuff as well. So again, what's included here is the course, the indicator, and the entire process, everything that you need to make money with this process. If you guys have any questions now, I'm happy to. I think most of the questions I have answered here on the ongoing basis. Yeah, all the webinars we do, Martin, are always recorded, right? So if there's a webinar we do, it'll be recorded, so you don't have to worry about that. Let's look at some more. Signals. Okay, so you guys have typed in a lot of the tickers to look for trade signals using this indicator. Let me just take some more that you guys typed in before. Sure, Netflix. Sure, Netflix is a good one. Here, the last 3 times that Netflix came up on this indicator was here. Overbought here, and what happened? After the blue arrows, repeat after me, the stock stopped going higher. How about here? What happened here? The stock stopped going higher, at least for a few days to 1 or 2 weeks. That's our time frame. And the most recent time it happened was right here, and you can see the stock stopped going higher. Beautiful opportunity to sell these call and put spreads. Okay, so good question. So Brent and some other people are asking, what if the trade goes against you? This is all covered in the course and in the live webinars. I only have another 4 minutes left, so there's not enough time to cover all that. But let me tell you this. It's a great question. Okay. Here's how it works. Let me ask you this question, Brent. This is why I'm not an advocate of using weekly options. This is why we structure these trades in a very, very specific manner, and that's why this works. Let's go back to LMT, which is just a recent trade that we just signaled that we saw that we got. Let's assume here on the 26th of December, you would have sold a put spread, okay, making the bet that the stock is at least not going to go dramatically against you. Let's assume you would have used weekly options or options expiring next week or even next month. Let's assume the very next trading day, Brent, the stock dropped 5%. What would have happened to your trade? You would have you're basically done. You're taking almost a maximum loss, almost. But what if we don't use options expiring next month, but options right now that expire, let's say in March? And we only hold these trades for 1 to 2 weeks on average. What would have happened if the stock would have gone against us 5% that very next morning? Yes, you would have lost some money, but you would have, let's say you would have lost, your car would have lost, let's say 1 tire, okay? And you would have been able to push that car back to the garage, no problem. Whereas if you would have sold options expiring next week or next month, about 3.5 wheels would have fallen off. Look, you're done. That's why this works. You use that strategy, which we explain in the course in great detail. You join us in those bonus webinars that we do, the next one, January 17th. You use the indicator and scanner that comes with this, the TSLA Vertical X Pro, and you've got something that you can make money with. Does that make sense to you, Brent Lane, for asking that question? There's a couple other people asked it earlier, so I wanted to address it. But thank you, Brent. It's a tremendously, it's the most important question, to be honest with you, that you could ask. So the fact that you asked that question shows me that you get it. Happy New Year to you. Yeah, exactly. So that's the key to the strategy. So again, if you want to learn the strategy, if you want to actually have a strategy where you don't have to make an aggressive bet where the stock is most likely going to go, and you literally taking the opposite bet, you have a dramatically better chance of making money. So just to be clear, this is not a trade alert service. Let me be very clear. This is not a trade alert service. This is a course, and you get the webinars with it, the live webinars. You get with it the indicator and scanner, and you get the Market Rover Lite, and you get 30 days active Market Rover Pro. On average, I do about 5 to 8 trades a month. On average, 5 to 8. It's a range, right? I do about 5 to 8 trades a month on average. Okay. Hope that makes sense. Cool. All right, guys. Well, listen, welcome aboard everyone that just purchased. Michelle, Craig, Steve, P. Boudreau, Mohammed, all you guys, Daniel. Excellent. Thank you, guys. Lisa.